everyone, it's Christopher from Serene Education with the 4 majors and health update for the 19th to the 24th of April 2015. Okay, let's have a look at the 4 majors. I'll start with the year against year start on the monthly time frame. Just have a quick look and see how this month has progressed for April. So March negativity, and we haven't seen any continuation. Well, we have seen price actually trading lower than the March close. Okay, so this is March, this is the close. You can see price has actually been trading lower this April, however failing to actually move lower as such. It's actually putting back. So we actually have a spinning top information right now on the April monthly candle. However, we still got another week preceding this week's close for the end of this month. So what we're going to do now is just to drop down to the weekly time frame. Let's have a look and see what's been happening. Straight away I get a sell signal, so we'll get rid of that horizontal line for now. Consolidation, on the monthly I said that we've seen a pullback, so that would constitute a lot of indecision on our weekly daily, and you can quite clearly see that price has just been going sideways. The indicator box on the right hand side of here, you'll notice the monthly, the weekly, and daily is still showing a lot of negativity, and the R squared is complementing a lot of that negativity. So we know that the overall trend for this particular pair is still negative. However, we haven't seen price making a new low on the monthly and weekly, and I'm talking about a new low in terms of the long-term trend. Okay, so if we're looking for a new low on the trend direction, you can see that last week's candle, we're looking at the weekly now, the euro against US dollar, you'll see last week's candle actually closed lower. So a nice little hammer formation here. We wanted to see a confirmation reversal candle, and sure enough we did get that reversal, which actually happened at a price support, which was the January low support, and we have resistance here, a nice hangman, and sure enough we had bearish sentiment coming through. However, saying that, we didn't see euro closing lower than the February low. Okay, so last week, in fact, there would have been opportunities to trade intraday, and I'll just drop down to the daily just to show you that. There would have been opportunities to trade lower. However, there we go. There's the prior low if you're looking at daily break lower. Fantastic. That was last week, in fact. So this was Thursday, Friday going into the end of last week. However, saying that, this week we would have taken the low on Sunday. That is Sunday's low here, and Friday's close. We would look for a nice bearish engulfing candle to confirm this week that we're likely to see further selling sentiment to the downside. And our first port of call would have been in and around this area right here. Why? Because that was our previous 2015 low. And however, saying that, the closer we get to these levels of support and resistance, the more uncertainty comes in because of the risk factor goes up. So you can see here, a lot of people intraday would have taken trades on the Monday open. However, by the close of that Monday, you can see a lot of people were out of those trades as they took profit because of the closeness, the proximity closeness of a major support and resistance level in the past. So any trades we took this week, when I say this week, last week, in fact, you would have taken quite aggressively because of the fact we're quite close to a major support and resistance level, which would have been this level here in March. And subsequently, what happened was we saw Tuesday bullish engulfing candle after a hammer formation at a major support and resistance level, and clearly Wednesday, Thursday, and Friday we saw movement to the upside. First port of call would have been potentially a target level back to the March close and the start of April. In fact, now we've closed higher. So as it stands at the moment now, we've gone back within this consolidative range that we've seen over the past month or so. So even though we're still seeing negativity on the indicator box, you can see that there's a large majority of the indicators on the intraday time frames are blue, and that's primarily because we've seen consolidation through the latter part of last week. And that's not primarily off good, positive US data. That's in fact off negative US data. So people, what we're seeing currently now in what is a still very negative euro setup is a lot of people are taking, because price is moving sideways, a lot of people are taking trades that are reflective to price action intraday, and they're quite aggressive. So aggressive entries, aggressive targets, and taking everything off the table once I get to those levels. So you're seeing a lot of movement, however, saying that a lot of movement just for data relating to that setup. So we're seeing a lot of consolidation, and primarily that's what's happening right now. So as it stands at the moment now, for this week, we'll go back to the weekly candle. This week you can see that we've had a candle that's actually pulled back into almost 50% of the prior week's candle. So we almost have what we would probably call a potential bearish Harami formation. So bullish Harami formation. Apologies, guys. Which means pregnant lady. So pregnant lady means birth, prosperity in Japanese terms. So that would mean bullishness, prosperity, new life, etc. So that would constitute, well, if we are seeing genuine positiveness now coming through, we would need to see a continuation going down into our daily time frame. So if I'm looking at the weekly candle here, I'll take the high of that weekly candle, draw a horizontal line, and then expect to look down now at this new week that we're going into to see a continuation of that. We can see where price actually moved to beforehand, which were these levels here where price actually tested the 50 period moving average on our daily time frame. You'll notice the 50 period moving average is thereabouts. Ideally, we'd like to get above that, and then we can have a clear target towards those levels where my price support and resistance level highs were roughly around here at about 190 odd pips or so. You're not going to get all of it, but that would be the case. But now what I'm doing is I'm trading aggressively counter trend, which would mean that I would have to apply a stricter and a more aggressive trading style for those intraday opportunities. Just be aware of that, guys, if you are trading consolidative ranges, because price is very much within a consolidative range. Just looking back on the daily for this particular pair, you'll notice that the 50 period moving average, which is this purple line, or this lilac line, has been a major resistance of price over the last 7 months or so. So we're heading into this. You can see that if I just zoom in closer again, you'll notice that early April we did see price rallying into the 50 period moving average once you closed above the 20. However, actually failing at that 50 period moving average. Now we could see the likes of that happening again. It's happened a number of times over the last 7 months or so. There's no reason why it can't happen again. So let's look at the fundamentals this week to see if there's anything out there that's really going to back up either negative US news or positive US news. Okay, we've seen a lot of negative US news, which has led to the euro moving slightly higher over the past week or so. So we are either going to see some negative news coming through this week to push the US dollar higher, which would then have a negative effect on the euro against US dollar. Okay, so look at the fundamentals just to see how things are panning out. You'll notice that the MACD over here is still predominantly below the zero level. It is dark red primarily because we've had a pullback now. So we are still very much, the candlesticks are still negative on our long term. So the bias we're still looking for is that negativity. Whether you choose to trade aggressively against that negativity intraday is entirely your choice. Just remember the risk involved and the possible outcomes of that. So there again, entirely your choice. Moving on to sterling here on the monthly, just having a look again at what she's done this month. We've seen negativity the start of April. However, we've seen her clawing back, and she's back up above the prior close of March, in fact. But you'll notice the long-term support and resistance level here that we saw back in 2013, most of 2013, in fact. You can see that price is still trading below that level. We had a nice bearish engulfing candle close low in the March, which actually took us lower after we saw the January-February support at the major long-term support and resistance level here through 2013. Our next port of call would ideally be down to these levels around here. We could see price consolidating before we even get to those levels. You can see that we've seen price edging lower over this month, in fact. However, back at the close of this week, in fact, we've actually seen prices moving back up. And if you look here, we still get a sell signal on the weekly time frame. You look at the indicator box, you'll notice that the monthly and the weekly are still predominantly negative, and the R squared is still complementing that negativity. The candlesticks are still red, even though we've had very, very uncertain news, volatile news over the last 2 weeks. In fact, you can see 2 weeks prior, we saw a nice bearish engulfing candle close lower after support level lower. So we would look for Monday, Tuesday, Wednesday entries to the downside on a close. That failed to materialize as we didn't see any of those happening. And this week we saw positive sterling movement. That's predominantly on the back end of negative US data. And what it's done now is last week's candles now engulfed 1, 2, 3, 4 prior weeks of movement. So what we have now is an engulfing candle. Having said that, price is still below a major support and resistance level. which was the levels that we saw on the weekly that go back to the early start of 2015, in fact. So ideally, if we are to see any further positiveness, okay, because we saw a nice bullish engulfing week close last week, we would take the high of Friday's close and then look to see any daily candles this week breaking, closing higher, to then allow us then to look at potentially taking aggressive counter trend trades towards certain levels within this pullback. Vitally important, guys. Okay, so now we know, okay, great, we have a bullish engulfing candle week last week, and similar to what the Euro US dollar data was, the fact that a lot of the data that came out last week wasn't sterling strength, it was more US dollar negativity, okay, which would then push sterling higher. Okay, so just be aware of that. And just pan out so you can see on the weekly, you'll see a major support and resistance level in the past year in 2013, which was that long-term monthly support and resistance line I mentioned on the monthly time frame. Price is still below that. Okay, so we've got to take that into board. You can see the MACD has been, excuse me, converging as prices moved lower. That happens naturally. However, if she's still trading below the prime major support and resistance level, we've still got to be well aware of that. Now it's entirely your choice. Do you trade aggressively this week coming up for Monday, Tuesday, Wednesday, break, close higher than last week's candle, and then look to profit aggressively with that? Or what you can do is give a full week back to give you reconfirmation of potential continuation with negative trend, or a breakout candle to tell you that we're going to see a further major pullback, and then we can start looking at levels, i.e. to here, for example, which were these highs that we saw at the end of February and going into March, before we go back to these levels over here where the institution moving average lies. So here you can quite clearly see that there are major target levels to the upside. However, price has to viably close above that to then allow us then to trade that sentiment. So dropping down to the daily time frame, there you go. You can see Friday's candle really pushing higher to the end of the week. However, by the close of the session on Friday evening, you can see prices pull all the way back again, and that led to this shooting star formation. It's still under the major resistance level high, which happens to be the 2-week resistance level, okay, and which happened to be a major support in the past. So clearly, blue arrow, the RMO is still negative, the OSM is above, so we have 2 cancels 2, candlesticks are still negative. So here, if we are to see any genuine buying opportunities for sterling against US dollar for the following week, we would need to see a nice bullish engulfing candle close higher. We would need to see a nice blue candle, the RMO going above the 0 level, to then allow us then to look for further upside. And we could look towards that major support and resistance level high, which I did on my weekly, which would then constitute to around about the institution moving average on our daily. Okay, so there again, just do your due diligence, see if there's any fundamental news that would back up either positive sterling data against a weak US data, or vice versa. For a continuation lower again, we would need to see a bearish engulfing candle after the shooting star, because this represents a shooting star. But if this is to be a genuine shooting star formation on the candlestick formation, we would need to see a nice bearish engulfing candle to confirm negativity after that negative sentiment candle formation, which would then put further bias to the downside, which is already a negative trend. And then we could look to potentially target the prior week lows, which are around the 146, 145 level, and you're looking in excess here of roughly around about 360 odd pips. You're not going to get all of it, but there's more than enough for there to get a genuine return this week sometime. Moving on the US dollar Swiss franc, a lot of hesitation over the past month or so as we saw the US dollar taking back all that negativity we saw through most of January, in fact. But however, saying that, you can see now that price has now moved back into a major support and resistance level. You can see last month's candle in March, we actually saw price trading well above the resistance levels that we saw through December and January, and closing lower. So we should have seen negativity this week. That failed to materialize as the month failed to actually, any weekly candle on the close of April failed to really move low with enough momentum, and therefore we see in price consolidative. You can see now this April is actually engulfing, because the candle is white, it's engulfing the prior bullish candle. Well, it's not actually a bullish, well, it closed higher than the prior month, but it's engulfing it now with negativity, and price is ranging because of that. And if you look at the indicator box down the bottom here, you're starting to see less positiveness and more negativity. And it's the R squared is not really complementing either end. So a lot of indecision. Drop down to the weekly and you'll see that more clearly. We'll just wait for price just to bring that up. So what we should be looking for now on the US dollar Swiss franc chart is for a lot of sideways motion there we go, you can see a lot of indecision at the moment. So here you'll notice that the candlesticks are still positive. However, we don't have a blue arrow to really complement that. The last arrow we have is still negative. If we're not making new highs, therefore you're not going to see any further upside. That means there's more negativity that's going to start to come into play. And clearly see here we had a nice bearish engulfing candle at prior resistance, and in the last 3 weeks or so we saw negativity, but that's come unstuck. Price over the last 3 weeks has failed to make a new low. Consolidative, however, saying that she's failed to make a new high. So price on the daily, in fact, if I drop down to the daily, we'll just wait for price to bring that up. You'll notice that we should see 2 weeks of a lot of sideways movement. Whether you choose to trade or not is entirely your choice. Okay, so you can see this week we've seen a lot of US negative data, which is in fact put a lot of pressure on the US dollar against Swiss franc, and you can see a lot of selling. This is Sunday evening's close. You can see Monday, Tuesday, Wednesday, Thursday, and Friday. Now moving lower. So last week, in fact, we saw movement of in excess of 250 odd pips, maybe more. But you can clearly see that price is now trading back below the institution on the daily, which is a negative signal. We have a red arrow. The candlesticks are still positive. So here, if we are to see any further negativity for this particular pair, we would need to see a nice bearish engulfing candle close lower this new week, and it has to be red. The RMA needs to drop below. The OSMA is just clearly closed lower now on Friday, but we don't have anything stacking up at the moment, and hence the reason why we have a lot of uncertainty on that daily time frame. A lot of negativity, and nothing's really complementing anything. So here, be patient, wait for a genuine bearish engulfing candle close lower on any day this week, and look to see if there's any data, as I mentioned before, that would then put a lot of negativity on the US dollar against the Swiss franc. Apologies. So here again, do your due diligence on the fundamentals to then give you that picture. Last pair is US dollar Japanese yen. Monthly, yet again, you can see a lot of consolidation. This is our 1, 2, 3, 4. We've had 4 consecutive months of hesitation at the current level. And there's a valid reason because of that. We just have to pan out a bit more. And you can see, looking back here to the 2005, 2006, 2007 range, you can see over those 3 years, in fact, we saw a lot of consolidation. So it only makes sense that you're going to see sort of consolidation at levels of major support and resistance level in the past. So anybody who bought way down here in 2011 or just recently here in 2014, in fact, would have looked at this level around here as a major target level to take profit, and that's exactly what's been happening. Price has got to this level. We've seen a lot of uncertainty coming out. We went into the end of 2014 with an indecision candle. January gave us a bearish engulfing candle. However, saying that, we didn't see price going into February really moving lower with that negativity, as we saw US dollar strength coming back into the market again. Having said that, she failed to close higher than the January high, and subsequently on the February-March, we saw an indecision candle. So on the monthly time frame, still a lot of hesitation for the US dollar Japanese yen, but also because of US dollar negativity coming through the past couple of weeks, which has led to this indecision we're seeing currently on our charts for the US dollar Japanese yen. Price is just moving sideways, a very, very volatile range. In fact, if you have been trading this particular pair within the range, then you would have known that the risk has been twofold, and it just clearly just doesn't really give us that many major trading opportunities, especially those who are new to trading currencies. So on the daily time frame, notice the candlesticks are still being positive. Once, twice we've seen negativity coming in. We saw it back here again, but you can see close to price now. On the Friday, we actually saw a negative candle formation. So we have red, 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 red. However, saying that candle is not very much a bearish one. A lot of indecision still in it. You can see the price has failed to break lower than the prior week's Sunday close. And then you see Monday, Tuesday, Wednesday, Thursday, Friday, and then Sunday, and then Monday, Tuesday, Wednesday this week. So we've seen less movement over the past week, primarily because of that negative US data that's come through, which has pushed the price lower. Saying that, we're back at a major support and resistance level, which was the 2-week support level back So now if we are to see any further negativity for the US dollar against Japanese yen, we would need to see a bearish engulfing counter close lower for this new week that comes up. Okay, so sometime this week between the 20th to the 24th, we would like to see a nice bearish engulfing counter to confirm that there's still negativity on the US dollar against the yen. And then we have a valid target level in and around this area down here at 117055 as a particular target for the coming week. Okay, looking at the indicator box, notice the long-term sentiment is still very much positive. However, intraday, you'll start getting to the shorter time frames. You can see a lot of uncertainty now coming through. And it's predominantly because price has just been ranging. A very, very horrible range over the past 4 months. As I mentioned to you, if you want to trade within the range, happy days. Know the risk involved, and as long as it doesn't impede with your money management, then go ahead. Those of you who don't have who are still new to trading and have a very small money pot, then this type of thing would be out of the question because you put a lot more risk on the table. So here again, do your due diligence. Look at if there's any fundamental news this week that likely to back up your story, or any trading opportunities, either weak US data or weak yen data, to then get a trading bias and then trade the outcome. That's it, guys. Short and sweet. Just on the 4 majors. Please, guys, ensure that you follow the rules of your template. If you are using the FX4, FX8, or the FME, for example, from Serene Education, just trade it very mechanical. Keep it as mechanical as possible. Apply correct money management rules to that, and you're definitely on a winner. If you are looking at getting into trading and you like what you're seeing here that I've shown you today, get a hold of us at the email address at the end of this video. Otherwise, I hope you have a fantastic trading week. Keep it as simple as possible, and most importantly, trade serenely.